right, welcome back to Robinhood Stock Market Watch List. My name is Carlos, and today, basically, it was Thursday 31st. Now it is a new month going into September 1st on a Friday. So last day of the week, going into a 3-day weekend, which is something that we'll talk about here in just a little bit. That way we know kind of what to expect for a Friday, as well as what to expect going into next week. So just very, really important information. But let's take a look at what Thursday looked like really quick. Thursday, August 31st, last day in the stock options. So take a look here. Tesla, again, always dominating the list, but we can kind of start seeing that, we're not getting as much volume like we were, throughout the week. And we should kind of see the same thing Friday, and probably even a little less volume, if not maybe about the same. But Tesla was up about 0.5%. About $258. I think it was kind of what started out in the red and was able to recover. And so it did a pretty good job and ended with a put and call ratio, with a call ratio at 50, almost 59%. And so that's about almost a 40-60, put and call ratio. And so there's a lot of people that love straddling Tesla. And there's no problem having a 40-60 ratio. And so one of the things that pro traders always say is follow the money. And so if that is where the money is going, always do the same. And so because a lot of times we'll see a lot of 50-50, but for some reason Amazon, which made it at the second place today, the most active stock option, second place at 1.2 million in options volume, 74% call ratio. That is way above normal for Amazon. Normally it's right around 60-70%, but earlier today was at 80%, and then throughout power hour it started to kind of trickle down a little bit. Apple kind of the same way. It was up there, and normally it's a 40-60 put and call ratio, but it was up there right about 70% calls. And so just chugging along, it was a lot higher than that, and it just kind of started to fall right there during power hour. And so Nvidia, which was fourth place, did really good, almost a 40-60 ratio. And then we have the PLTR, the Palantir Technologies, which we've talked a lot about, and this is definitely one of the days that it decided to fall. But it's had a lot of call percentage ratios, very high amount and a very good amount of options volume. So this is a great, it's been a great volatile stock, but when it comes to this smaller dollar amount, the higher percentage doesn't really gain or lose as much compared to a higher share amount, because the smaller percentage has a much bigger dollar amount. And so that makes a huge difference, and that's why investors like to trade these stock options that are usually around 100, 200, couple $100, And so, but every once in a while, if we get some volatility like this, it can kind of simulate the stock option volatility that something like this, can do. And so, but we're starting to see some semiconductors kind of creep up the list. Intel, which is not normally on the list, and AMD, which is usually has a lot more activity than Intel. So something's going on with Intel. Looking at this is this is a stock option screener, which is kind of more or less like our radar. So we never really want to see anything kind of fly underneath the radar. When we look at this regularly, we know what's normally on here and what's not normally on here. And so that's why it's really important that that we know kind of what's going on. So Intel, which is not normally on the top of this list, if it usually is, it's on the bottom. not the top. And because it's on the top, we have almost an 81% call ratio. That is huge. And so something's going on there. And so where AMD has about a 50-50 ratio. And so not as volatile. Definitely, Thursday was a pretty, mellow, relaxed day, but there was some volatility, here and there, especially with some penny stocks. I think, as we get closer into the fall, that's when it's really a penny stock season where we see a lot of volatility with, 20, 30, 40, 50, 100%, swings up or down. And so, but, when it comes to stock options, we always want to try to avoid penny stocks as much as we can. And so, going down the list, we normally see, Facebook, Meta, and AMC, which is a manipulated stock. Always something I recommend is to avoid manipulated stocks like AMC and GameStop, because in the stock options world, they just depreciate really, really fast. And so we definitely, that is something that we can control if we are aware of it. And so we just make it a rule, don't, trade the manipulated stocks. So then we have the Microsoft, Shopify going down the list. Have normal ratios, 40-60 ratio. Shopify's a little higher, almost about 70%, as well as Google with the alphabet there. Then we have Tilray brands, something that we've talked about before. If you guys watched our meeting yesterday, Tilray did another 11%. It is doing good, but it's been bouncing around that, around that $3 area, $2.50, $3, maybe $3, whatever. And so it's like I said, eventually, once there's clues that it is going to legalize, again, in two different ways, where once the United States achieves a certain amount of states that exceeds like 50%, like let's say out of 50 states, let's say 26 states legalize cannabis, legalize recreational cannabis. And so once there's more than 50%, it's just automatically going to happen for the rest of the United States. I can't remember exactly how many states that it is, like 26, 27, 20, whatever. But it's going to happen. I think we're at 22, 23 right now. And so we're almost there. And so it's either going to happen that way, or they're going to vote on it. But we've done this before in the past, and it goes through different channels and hoops. But usually towards the end of the line, they deny it, and so then they're like, okay, let's try again next year. And then so they try to do that again, and then they deny it, and then so. But it's going to happen. It's inevitable. And when it does, cannabis stocks are going to fly through the roof. And so, but it's a kind of a once in a lifetime wave that we ride up, because as soon as it gets legalized, then all the cannabis stocks are going to plunge right back down to penny stocks. So again, we want to get in, get out, and we just got to know what's going to happen before it happens. That way, you can take advantage of the situation and the opportunity. And the reason why the cannabis stocks will plunge is because once it legalized, they flood the market. There's just too much product, and they cheap sell it. They have to sell it by volume and stuff. So it's not a very profitable industry on that part. But even though the government makes a lot of money, millions of dollars, but we're not going to see that in the stock market. So because it goes in Uncle Sam's pocket. So, but just know that even Tilray, which used to be $150, and I watched and participated in the whole the Canadian opportunity, where they I believe they voted on it and it passed. And so when that happens, it usually happens like in the middle of the year. And but it doesn't go into effect until the next calendar year. So we have that time between when they voted on it, or when they say that it's going to happen, between that time and the next calendar year when it actually goes in effect. That is the amount of time that we have to ride that wave. And so just know that it is inevitable. It's going to happen. It's just a matter of when it's going to happen. And so, but sometimes we can get little clues like this, but sometimes they're false events where we'll see some things like this, and then all of a sudden it starts falling down 5, 10, 15, 20%, whatever, because, sometimes we get these little false hopes, from the government or whatever, because, they're trying, but, there's just other people within these channels that are just, just saying no. And so, but eventually, one of these days, it's going to slip through the cracks or whatever, and it's going to be again a lifetime, an opportunity of a lifetime. And so, hopefully, that makes sense. So going down the list, let's see if there's anything else that's kind of unusual. Here's another unusual one: the K-View, Kenview Incorporated, which is at $23. Is down just a smidge, like a tenth of a percent, just nothing. But it's got 82% put ratio and about an 18% call ratio. So a lot of people are betting against this. Taking a look at NEO, which is still right around $10. It's down today, almost at negative 4%. But it's got a lot of calls, 71% call ratio, and just right around 29% put ratio. Let's take a look at some of the most active individual calls and puts. See kind of what's going on. That way we can kind of see what people are trading going into tomorrow, as well as maybe next week or the next several weeks. So with Tesla being at about $258, the most active individual call and put is basically the $260 call strike price. That is what the majority of investors, 193,000 are in volume, is what they've been trading, as well as what they're kind of holding going into the next day. But it's got no more days left after that. And so it will definitely expire. So those are some pretty volatile ones. So you got to be really tricky with the ones that are really close to its expiration date. Apple is the second one, highest one at $190 call strike price, and it's currently at $187.87. But the third one, which is the a $120 call strike price. Now Amazon, which is at $138. This one is in the money, and so pretty well in the money. And I know a lot of people may be confused on why would anyone want to buy those. And so they're not going to be as volatile, but they're going to be very, very expensive compared to some of the other ones. Because these other ones are going to be like, $22 or $185 or whatever. But with something like this is going to be $2,100 per contract, and so this is what the high rollers usually like to trade, because when you're trading a higher value contract, you don't have to have as many contracts, because when you start trading quite a bit of higher dollar amounts, and you begin dealing with a lot of contracts, they execute in spurts. Sometimes they'll execute in 5, 10, 15, 20 here and there. And so while it's doing that, whether it be buying or selling contracts, the values of everything are constantly moving and fluctuating. And so then it's basically going to be a partial execution. You're going to have to go back in there and reset your order, but then that could cost you money and gains, but in these cases, though, a lot of people can just buy their strike prices pretty well in the money, and so it's not going to depreciate as much. It's going to be more valuable. It's not going to be as volatile, but it also means that it's more likely it's going to be a for sure thing rather than straddling. Or straddling is when you're betting both the stock is going to go up and down. having both calls and puts. And normally you want to have kind of the equal, the same. However, again, so this provides us a clue that that investors are betting that Amazon's going to keep going up. So hopefully that makes sense. Which is kind of interesting that there's a $95 call. So they're trying to like not make it too obvious, but they are making it obvious, with these higher rollers. I mean, it's $4,300 per one contract. That is a lot, and there's 96,000 in volume from it. And so, but the open interest is a lot higher, so it could potentially be selling activity rather than buying activity. So we'll have to eventually take a closer look at that, as the next day kind of goes on, whether it's going to accumulate or if it's going to subtract it from the open interest. So here's Intel, which is already in the money at the $31 call strike price. The share price is right at $35. This $31 in the money strike price, which is expires this December 15th, so approximately 105 days from now. Basically costs about $555 per contract, but it's got a lot of volume, 80,000 volume, and it had like almost no open interest. The open interest only had 372. And if you're new to options or don't know what open interest is basically the total number of open contracts for the previous day that have been traded but not yet liquidated via offsetting trades, which means that this is the amount of people that bought this particular strike price prior from this current day. So it's a previous of an accumulation of the amount of people that are holding that have not sold yet. So when you have a total amount of 372 people that have bought it previously from the current day, and then all of a sudden you have 80,000 just out of the blue, that just lets us know that that is a pure amount of buying activity, not just a blend of buying and selling activity. It is just all pretty much buying activity. So this is just another clue that people are betting that Intel is going to keep going up. Now we've seen basically AMD and Nvidia do very, very well. Now maybe it's another semiconductor's time to shine. So this is one of those stocks we cannot let fly under our radar. And so definitely, it's definitely one we need to make sure we keep this close to our watch list, because it's only $35. Intel should be what, $100? I've seen this with AMD and Nvidia. AMD was like $20. And so now, and when we got to a certain point, I started telling people it's time, but this was before the Xbox and the PlayStation got remodeled. So those usually they come out with a new system every 8 years, and so it's kind of predictable to kind of time those, because they usually pick AMD and Nvidia. And so with Intel, I'm sure they kind of have their cycle too, and it may be their time to shine. And again, we need to make sure that we keep a close eye on it, because the high rollers are definitely already investing. And so, we definitely want to make sure that we don't miss any opportunities. And so going down the list, we have more activity with Nvidia, Tesla, some more, but they're all going to expire in the current day. But we do have that KView stock, which is currently at $23, but we have a $30 put. So again, this one is also in the money pretty heavily. And so this expires in about 2 weeks on September 15th, and it's right around $700 a contract. It's got 66,000 in volume and just under 45,000 in open interest. So the volume definitely exceeds the open interest, so it definitely shows more interest. Going down the list a little bit more, we got Amazon, Apple, and Tesla that all expire in the current date. But then we have Intel again, which again is $35 a share, but we have a $27 call strike price as well that is also deep in the money. But it's right around $800 per contract. This one expires in October 20th. Approximately 49 days from now, but it's got about 60,000 in volume and 60,500 in open interest. So we'll have to take a closer look at that activity during the next trading later on today, basically, when the market opens. And so, so this is all kind of sorted out by volume. Let's take a look at open interest and sort it out and see what the highest ones are, because we always want to know again what's kind of going on, what's happening, as well as what's going to happen before it happens. And so we have this showed up. Was it Finch? I can't remember. Farfetch. And so that is FTCH is the ticker. And so I'm not too familiar with this one, but it is a penny stock, and it is currently at $2.85. We have a put strike price that a lot of people are accumulating. And so this one expires almost a year from now, next year in June 21st. It's almost about like $26 per contract, so it's really nothing, not a whole lot, very inexpensive. 1,000 in today's volume, and but once it gets from here to $2.85 to $2, even with about half this amount of time, this $26 per contract would easily turn into $260 a contract. It just depends on what happens, but it can be very. But a lot of people they're buying and holding on it, betting that that's what's going to happen. And so ET looks like it has a $15 call. It's currently at about $13.47, but we have a $15 strike price. And so that's accumulating. Ford, people are betting Ford's going down. Amazon, we're starting to see people betting against Amazon, or they're either selling this $95 put, or no, it's a call strike price. This one is already in the money. Very expensive. Again, $4,300 per contract. Definitely high rollers, and 96,000. That's crazy. Look, they're just just a very short amount of time. Usually, we don't see a lot of this short expiration dates with high open interest, but there's definitely some interesting activity there. And so there's that K view again with a $22.50 put. There's let me see if there's any other ones that really stand out. AMC, again, another manipulated stock. Again, pointing this out just to let you know that AMC is currently at $12.55. There's a $2 put strike price. We always see people betting against it, and they're making a lot of money, from it, because AMC is just, it does go up, occasionally gets these little pump actions, but it just seems to keep going down. So it's just definitely something again to avoid. But then we got C right here, which I believe is the Citibank, right? Not Citibank, Citigroup. And so, which is currently at $41.29. We have a $50 call strike price. And even if you're not in the stock options, this could still be highly valuable information. So you know what people are betting on and kind of what they're anticipating it's headed. So if it goes from $41 to $50 a share, if you're just buying shares, then you just gained like 23%. And it could be a stock that will pay you dividends every 3 months. So not only are you holding on to an appreciating asset, but they're going to pay you every 3 months. And this is a pretty short amount of time just for next January. So this is a lot of people betting that, Citigroup could easily reach at that point. But if you do decide to buy these contracts, they're right around $41 per contract. And if it does get to that point, it could easily turn into $400 a contract. So and I know with the interest rate hikes and everything, interest rates with these major banks compared to your local credit unions are more competitive than they've ever been before. And a lot of times, these major national banks' interest rates are a lot less than the credit unions now. Because normally we used to just go to our local credit unions and avoid the national banks because our credit unions had such a much lower interest rate. Well, they can't do that anymore. And so now the tables have kind of turned. And so these national banks are getting more business than they've ever have. They're getting more interest. And so when it comes to the car industry, it does very well compared to the real estate industry, because when it comes to the economy, when the economy is doing really, really great, people like to upgrade their vehicles, and so we just kind of have that cycle. And so when the economy does really bad, people like to downgrade their vehicles. And so the automotive industry does very well regardless, and they're doing even better with people paying 5.9% for a vehicle, when our local credit unions are offering 6.9 or 7.9% interest, as low as 7.9% for a new or newly used vehicle. And so, so we should see more activity with the financial stocks, especially going into the holiday seasons. We already see reports on the news about how the credit card usage is increasing, and it's just going to help the banks. And when we're going into the holiday season, we're going to see a lot of these financial stocks go from here to here during Christmas, because investors always like to invest early, because they know that after the fourth quarter, when we start going over the financial earnings and whatnot, they're probably going to do very, very well, and so their values are going to be up. And so the financial stocks are definitely something that we need to consider, as well as energy stocks, going into the fall and the winter season for the long-term, short-term investors. And so we never want to fall in love with any particular stock. These are just stocks, but they all have their pros and they all have their cons. And so we all want to make sure that we get into like technology stocks during the spring and the summertime, and we all need to get out of technology stocks and into energy stocks and these financial stocks during the fall and the winter season. And one of the reasons why is because it provides great opportunities for the technology stocks. So a lot of people know this. A lot of investors, millionaires, billionaires, will sell during that time, and they all just kind of participate in it at the same time, and because it just creates opportunity. That way they can buy in at a lower cost later and just repeat the cycle. But during the fall and the winter season, when it's really, really cold, energy is used tremendously for electricity and heating your home and everything. And during the holidays, like during Thanksgiving, Christmas, and so on, people travel a lot. They're driving, they're flying, and so that's where we're going to see a lot of energy stocks. And so I'm going to upload something really quick to the our group chat room really quick. That way I can talk about it. It's definitely something and very important that we need to remind each other that there is a stock market and an economic cycle. There's even a cryptocurrency cycle. Now, the cryptocurrency cycle, which I won't get into this a whole lot, but the cryptocurrency has a 4-year cycle. The stock market has a 1-year cycle. Our economy has a 10-year cycle. So the stock market having a 1-year cycle is just something that we've talked about, where 6 months, the technology stocks go up, and then 6 months they go down, where other stocks go up, and then other stocks go down after 6 months. And so our economy as the 10-year cycle, where the next 5 years the economy is doing really bad, and then the next 5 years after that the economy is doing really good, then the next 5 years after that the economy is doing really bad, and then so on. It just kind of does this teeter-tottering things. So as long as you're aware of that, that allows us to take advantage of the system, and or the cycle. And so I'm going to pull this image up. Hopefully you can see it. If not, hopefully you can dig into this software, that way you can kind of take a look. This is the most user-friendly economic and stock market cycle that I've been able to find. That way we can talk about it. Now, basically okay, so the blue line is our economy. The red line is the stock market. And so, we are basically right here in the bull market. And so where the full recession is on the bottom. And I know it may look confusing. It's like the recession goes down, but the stock market goes up. It's like, why? I know it doesn't make sense, but it is what it is. And we just have to know that and how things work. Because as long as you are aware of how things work, you can become a better player, a better investor, and a better trader. And so as long as we know it is what it is and how things work, and so when the economy is at the recession, and then we notice that the stock market's going up, it's because that the investors in Wall Street and all those politicians and millionaires and billionaires know this, that even though if we're at the full recession, the early recovery is right around the corner. So they've already taken advantage of the stock market, trying to get in much lower. I mean, it wasn't that long ago where Tesla was $100. When Elon Musk bought Twitter. I mean, it was a mess. And so, but there was a lot of tech stocks that were down, and it provided great opportunities during the market bottom. And so, but once we start getting that feeling where the full recession is near, all of a sudden we started seeing a lot of the technology stocks started going up. So the bull market, we still want to focus on the technology stocks, because the bull market is not over. We still have a few more weeks, which we can get into here in a little bit. But that means that the market top is not that far away. But that also means that that's when we should start seeing a little bit more of an early recovery, which really isn't also that far away. The early recovery is basically when the government stops talking about interest rate hikes. We need to start hearing them talk about interest rate easing and what they're going to do throughout the early recovery process. So it almost seems like this part here is basically at the end of the year. Like let's say like the end of January, at the end of December or early January. So that could be basically the market top. And even though these green boxes lets us know what we should really be focusing on for basically the long-term and short-term type investors, for the most part. And so even though it has basic materials or maybe commodities or whatever, but also energy, staples, but it also means that we should be getting rid of this stuff that was already on the bottom. And the majority of the stuff that people are going to have is the technology stocks, because they bought it on the bottom, they're on the top. What happens when something has reached this top? Oh, it finds a new bottom. And so throughout that process, we might as well not even participate in that whole downtrending. Get out of the technology stocks or whatever you have that is going to be downtrending, and we need to focus on what is going to be uptrending when the market is going down into the bear market. And so this basically says we need to be focused on the basic materials, energy, staples, and primarily energy, because again, and that's going to be like your oil companies and so anything that has to do with energy, especially energy companies, things that have, provide electricity or natural gas, oil, gas, whatever. And so that's really important. And if you have like a 401k or a retirement plan, each one of those has these little, lots of settings. So if you log into it, you can easily change your plan, whatever it is. Yeah, you may have, moderate, aggressive, conservative. They all have certain plans that focus on different things, whether it be bonds or whatever. And if you have something with bonds, usually if we go to an interest rate easing thing, usually bonds are going to start going down. And so you definitely want to avoid that, and then start getting into some of these other things, like during the bear market would be like also healthcare, energy, and then and then utilities, and then maybe even some more of the finance stocks once they've reached the the bottom. But so this is a very interesting cycle, but it is what it is, and I've seen it happen the last basically 20 years that I've been doing this and watching it and everything. And so so I just wanted to throw that out there. Hopefully you guys kind of learned a lot from that. Going back to the open interest, let's see if there's anything else that kind of stands out. Let's see here. Not really seeing anything. There is a so here's a stock. It is a penny stock, a $7.61. The stock is AIV. What is AIV? Apartment Investment and Management. It was down today. It was down negative 2.69%. But we have a $12.50 call strike price that expires this December 15th. And each contract is almost about $10 per contract. So really not a whole lot, but we do have a 10,000 in volume, 60,000 in open interest. So it's definitely very, very interesting. Though we used to see a $825 call strike price for Tesla. I had a very high open interest, but that must have went away a few days ago. So let's take a look at our upcoming economic reports. Coming up later today, let me adjust this here. So we always want to see the most important United States. And so then we have Friday, the September 1st. First day of the month, and but also we need to be on the lookout for any kind of information that the electric vehicle companies release. And we should get a monthly report, where the monthly report will be where they'll talk about maybe how many vehicles that they produced, maybe their sales and their delivery reports. And so that will create some volatility for Friday, September 1st, if they release that information. Sometimes it takes them a couple days. So, for example, if Tesla doesn't have that information ready for us sometime Friday, September 1st, we should get that. We will get that information probably over the weekend, and it will affect the next trading day, which will be Tuesday, because Friday is a holiday. And so let's talk about the holiday weekend. It's a 3-day weekend, and so that typically means that it kind of scares a lot of investors and traders, because they don't like uncertainty. And so when you have a 3-day weekend, a lot can happen when it comes to the news. And what I mean by that is that the international community can do something or say something that Wall Street investors and traders don't want to hear. And it could be Putin, saying something or doing something stupid. Or it could be Kim Jong-un also doing something or saying something stupid. And the media that could just take that and blow it out of proportion to the point where it does manipulate the stock market, investors, and traders. And so so a lot of investors and traders will scale back from holding anything or doing anything throughout the weekend. And so that's where we'll kind of see some, a lower volume, lower activity going into Friday. Now, Friday's economic reports are very mild. Now, the only one that I think is pretty major is probably the unemployment report, which, when it comes to the forecast at 3.5%, which is the same as the previous. So it doesn't tell us whether it be more or less. It doesn't let us know, is it going to be bullish or bearish. Kind of lets us know, just be prepared for mixed volatility. It could or will go both directions, and to be prepared. And so, or we may not really see anything. It may not really phase it, because it is what it is, and we're going on a 3-day weekend. So there's just less volume and less buying and selling activity. And so a lot of investors and traders may take Friday off and turn it into a 4-day weekend. And so that's where we'll see just a very small amount of activity. But it is important that if you're now getting into the economic reports have the biggest impact on the stock market. And it's important to know when it's going to impact the stock market. Now, when we're looking on the website, they do provide it in Eastern time zone. But if you're looking on your mobile device on your investing.com application from your app store that you can download, it will grab your own time zone, so it'll base it off of where you're at. And so, so just know we have 3 economic reports that are scheduled to be released 1 hour before the stock market opens. So they're going to hit all at the same time. But like I said, we do have the non-farm payrolls for the month of August, which the forecast is going to be less than the previous. And so typically in a normal world, that would be bad. That would be bearish. However, we've seen a trend throughout the week where bad news is good news, or maybe good news is bad news. And so I don't think we've really have lost that. And so if that's the case, this bad news would provide good news. And so I think that's one of the clues that we're going to have within this bit of information. So, but to be determined, we'll have to take a look at what the U.S. futures looks like really quick. They're probably, I think last I saw, they're pretty okay. So they're pretty decent. I mean, a lot of things can change, but at this time, this late at night, not as much. And so, but we are up to almost 0.25% on one, maybe as low as 0.12% on another. So it's still not as much, but it's still green, and but it can change at a moment's notice. But so far it is bullish, and so far the clues and all the stars are starting to align, so we know what the day is going to do before it happens. And so and then looking at the ISM manufacturing reports, the PMI for the month of August, which is at 47 for the forecast, and the previous was 46.4. So again, in a normal world, that would normally be good. But again, with our current trend, what would that be? Good news is bad news. And so, but again, this is a report that's going to be released 30 minutes after the stock market opens. So just as I had anticipated before, that the market will probably open in the green, but it'll do what before close? It'll probably close in the red, because all the uncertainty, but also the last bit of the reports are starting to look bearish, because the good news is bad news. This ISM manufacturing prices for the month of August, which is forecast to be at 43.9, where the previous was 42.6. So it's higher than. So again, in a normal world, it being higher should be good, but that's not the trend right now. Good news is bad news is good news. And so hopefully you guys can see that. Hopefully that makes sense to a certain degree. But then what affects the power hour, or later on in the evening, is the president's schedule and the White House schedule. And this time of night, that's when it's populated. So we'll go to the website that that we use to provide that information. So President receives their normal daily briefing, probably right after breakfast, probably. But we don't have a White House. Let me refresh it just to make sure. We don't have a White House press conference during Power Hour. So they're not. It's not a way where it can help pump up the market or a way to pour fuel on the fire. But we do have President Biden that's scheduled to speak at 11:15 a.m. in the morning Eastern Time. So the president delivers remarks on the August jobs report that's released early in the morning. So he's going to try to take credit for it. Oh, it's me, it's because of me. All these, jobs are blah, blah, blah. He's going to say, good news is going to be bad news. And so, and the reason why that is because they're trying to lower these economic numbers to lower inflation by increasing interest rates. And if the interest rates are going up and these numbers are not going down, it's because our economy is strong. America is strong. Americans are strong. And so it's the government's benefiting from it. But investors want to see kind of the plan in action work, and if it's not, then that's where the good news ends up being bad news for the market. But again, the early recovery is right around the corner. The worst is going to be behind us, where they're going to stop talking about interest rate hikes. I was hoping that they'll start doing interest rate easing next year, but I don't think so. They'll probably do it the next year after, because I believe that the politicians, next year is an election year. I believe the politicians are all going to say, vote for me, I'll lower interest rates. No, vote for me, I'll lower interest rates. So it's going to be a mess. So just know that we're going to see some more bearish activity. What would that be? Almost 2 hours after the stock market opens. And so, but there's nothing that's going to be really affecting Power Hour except for a 3-day weekend. So at least we know what's going to happen, before it happens with that. Now let's get into the there's not much for the earnings, because all there is just the one, and I have no idea what that is. DDL is the stock, but that's the one that's on the list for the most anticipated earnings release, but it's definitely not the top 10. So, but the other ones did pretty well. Broadcom, Lululemon, and MongoDB all were pretty decently volatile. So, but later on Friday throughout the day, we'll be able to receive our next earnings list for the next following week. So other than that, that's all I got going into Friday. Anybody have any questions? Want to kind of relay any messages or want to bring anything to the table? If not, you can unmute your mic and speak, or you can share your screen. Just let me know.